Hey everyone, welcome to our deep dive. Today, we're exploring US history through the stock market, booms, busts, crashes, and rallies, all set against presidential administrations. From the founding fathers to the digital age, we'll see how each president's time in office intertwined with Wall Street's ups and downs. Get ready for a wild ride as we uncover the fascinating stories behind the numbers. We'll track the stock market under every US president and how their policies, or the times, shape the markets. Let's dive in. Picture this. It's 1792, George Washington's second term, and merchants gather under a buttonwood tree on Wall Street. They're laying the groundwork for what will become the New York Stock Exchange. Back then, the stock market was like an uncharted frontier, a fledgling idea in a newly formed nation. The era of good feelings under President James Monroe saw the nation experience its first significant period of economic expansion. The early decades of the 19th century saw steady economic growth, fueled by canals, railroads, and early banks. The seeds of American capitalism were being planted, and the stock market, like the nation, was poised for transformation. Fast forward to the Civil War, a time of great strife and transformation in America. Amidst the turmoil, President Abraham Lincoln introduced war bonds, a revolutionary financial instrument at the time. These bonds allowed ordinary Americans to invest in the war effort, making them stakeholders in the nation's future. This marked a significant turning point, as everyday people began to see the stock market not just as a playground for the wealthy, but as a potential source of financial security and growth. The post-war period, known as the Gilded Age, saw incredible industrial growth under presidents like Ulysses S. Grant and William McKinley. Their leadership helped steer the country through a time of rapid change. Railroads, steel mills, and the burgeoning oil industry boomed, transforming the American landscape and economy. The stock market took notice, reflecting the nation's industrial ambitions. However, this era of massive speculation also led to economic instability. The Panic of 1873 was a stark reminder of the volatility that could accompany rapid growth. Despite these setbacks, the stock market proved resilient. By the 1880s, it had bounced back, stronger and more integral to the American economy than ever before. The Gilded Age cemented the stock market's role as a powerful engine of economic growth, driving innovation and prosperity. Yet it was also a time of stark contrasts, with incredible wealth creation on one hand and deepening inequality on the other, setting the stage for future economic and social challenges. As the 20th century dawned, America faced calls for reform. The nation was rapidly industrializing, and with that came significant challenges. Monopolies and trusts dominated the economic landscape, stifling competition and exploiting workers. The public demanded change, and the government had to respond. Enter Teddy Roosevelt, the trust-busting president. Roosevelt, with his larger-than-life persona, took on the powerful industrialists head-on. He believed that no individual or company should have unchecked power, and he was determined to ensure fair competition. Roosevelt used the Sherman Antitrust Act to break up powerful trusts like Standard Oil, creating a more stable financial system. This move was revolutionary, setting a precedent for future regulations. It was a bold step towards curbing corporate greed and ensuring that the economy worked for everyone, not just the elite. World War I brought uncertainty, but the Roaring Twenties under President Calvin Coolidge saw unprecedented economic growth. The war had spurred technological advancements, and the post-war period was marked by a sense of optimism and prosperity. People were eager to embrace new technologies and lifestyles. The Dow Jones skyrocketed nearly 500% during the decade, fueled by new technologies like the radio and the automobile. These innovations transformed daily life, making communication and transportation more accessible than ever before. The stock market became a symbol of the nation's booming economy, but the party ended in October 1929 with the infamous stock market crash, ushering in the Great Depression. The crash was sudden and devastating, wiping out years of economic gains in a matter of days. It was a stark reminder of the volatility of the market and the dangers of unchecked speculation. President Herbert Hoover faced the worst economic crisis in American history. Despite his efforts to stabilize the economy, the situation continued to deteriorate. Hoover's policies were seen as too little, too late, and he struggled to provide effective leadership during this tumultuous time. The crash wiped out billions in wealth, leaving countless Americans financially ruined. Families lost their savings, businesses went bankrupt, and unemployment soared. The social fabric of the nation was stretched to its breaking point as people struggled to survive. The Dow Jones, which peaked at 381 points in September 1929, bottomed out at 41 points in July 1932. This dramatic decline reflected the deep economic malaise that gripped the country. Recovery seemed a distant dream as the nation grappled with the harsh realities of the Great Depression. It was a devastating blow from which the nation would take years to recover. The Great Depression left an indelible mark on American society, reshaping the economic and political landscape. It was a period of profound hardship, but also one of resilience and determination. The stock market's resilience would be tested like never before. The road to recovery was long and arduous, but it laid the foundation for future economic reforms and a more robust financial system. The lessons learned during this period would shape the nation's approach to economic policy for decades to come. The Great Depression brought immense hardship. Enter Franklin Delano Roosevelt with his New Deal. FDR's reforms stabilized the financial system and restored confidence in the market. The stock market began a slow climb upward during FDR's first 2 terms. World War II initially brought uncertainty, but the war efforts spurred economic growth. By the war's end, the stock market had regained much of its lost ground. Under President Harry Truman, the nation transitioned to a peacetime economy, and the stock market continued its upward trajectory. The 1950s, under President Dwight D. Eisenhower, saw unprecedented prosperity and a booming stock market. Annual returns averaged over 15% during the 1950s, fueled by a growing middle class and a booming economy. The American dream seemed within reach for millions. The 1960s were tumultuous and the 1970s brought new economic challenges. Under President Richard Nixon, the U.S. abandoned the gold standard, leading to floating exchange rates and inflation. The stock market entered a period of turbulence, struggling with inflation, rising interest rates, and an energy crisis. The 1973-74 bear market saw the S&P 500 plummet nearly 50%. Jimmy Carter faced stagflation, a combination of stagnant growth and high inflation. The stock market delivered dismal returns throughout the 1970s. Investors grew increasingly uncertain about the future. The stage was set for a dramatic shift in economic thinking. The 1980s began with Ronald Reagan's promise of morning in America. Reagan's supply-side economics, tax cuts, and deregulation fueled a historic bull market. Companies like Apple, Microsoft, and Intel led a technological revolution. The stock market soared but experienced a dramatic crash on Black Monday in 1987. Swift action by the Federal Reserve helped avert a broader crisis. The 1980s ended with the stock market significantly higher. George H.W. Bush presided over continued economic expansion. Bill Clinton's presidency saw the tech boom in the dot-com bubble. The Nasdaq Composite soared to dizzying heights. The stock market reflected the optimism and innovation of the era. The dot-com bubble burst in 2000, wiping out trillions in market value. George W. Bush faced the challenge of steering the economy through this turmoil. The 9/11 attacks in 2001 had a profound impact on the nation and the stock market. The Federal Reserve slashed interest rates, and the Bush administration implemented stimulus measures. The stock market gradually recovered, but a new crisis was brewing. The housing bubble burst in 2008, triggering the worst financial crisis since the Great Depression. Banks faced insolvency, credit markets froze, and the economy plunged into recession. The S&P 500 plummeted nearly 60% from its peak. Barack Obama inherited this economic mess and took swift action to stabilize the financial system. The stock market began to recover, reflecting the resilience of the American economy. The Obama administration implemented a massive stimulus package and enacted reforms to prevent a repeat of the financial meltdown. This included the American Recovery and Reinvestment Act, which aimed to save and create jobs, provide temporary relief programs for those most affected by the recession, and invest in infrastructure, education, health, and renewable energy. Additionally, financial reform legislation was signed to increase transparency and accountability in the financial system. The stock market more than doubled from its March 2009 low by the end of Obama's first term. This remarkable recovery was driven by investor confidence in the administration's policies and the overall economic rebound. The Dow Jones Industrial Average and the S&P 500 saw significant gains, reflecting the broader economic recovery. However, the recovery was uneven, and many Americans felt left behind. Economic inequality became more pronounced, with wealth concentrated among the top earners, while middle and lower-income families continued to struggle. Unemployment lines grew and many businesses, especially small ones, faced closures, highlighting the disparities in the recovery process. Donald Trump campaigned on a promise to make America great again. His message resonated with many who felt disillusioned by the uneven recovery and economic challenges. He pledged to bring back jobs, reduce taxes, and implement policies that would benefit American workers and businesses. The stock market rallied after his election, fueled by tax cuts and deregulation. Investors were optimistic about the pro-business stance of the new administration, leading to a surge in stock prices. The market's bullish trend was seen as a sign of confidence in Trump's economic policies. The Tax Cuts and Jobs Act of 2017 boosted corporate profits and propelled the stock market to new heights. The legislation significantly reduced the corporate tax rate, leading to increased profitability for businesses. This, in turn, resulted in higher stock valuations and a booming market. However, Trump's presidency was marked by trade wars and political volatility. The US-China trade war, characterized by tariffs and retaliatory measures, created uncertainty in global markets. Political protests and divisive rhetoric further contributed to the volatile environment. The COVID-19 pandemic in 2020 threw the global economy into chaos. Lockdowns and restrictions led to a sharp economic downturn, with businesses closing and unemployment rates soaring. The stock market experienced a dramatic crash, reflecting the widespread fear and uncertainty. The stock market plunged into a bear market but recovered quickly with the vaccine rollout. The development and distribution of vaccines brought hope and optimism, leading to a swift rebound in stock prices. The market's recovery was seen as a sign of resilience and the potential for economic revival. Joe Biden faced the task of guiding the country through the pandemic and addressing economic inequality. His administration focused on managing the health crisis, supporting economic recovery, and tackling long-standing issues such as income disparity and supply chain disruptions. The challenges were immense, but the goal was to build a more equitable and resilient economy. So, there you have it, a whirlwind tour of the stock market through every U.S. presidency. From the founding of the New York Stock Exchange to today's tech-driven markets, we've seen how the stock market reflects American history. Despite wars, recessions, and crises, the market has always found a way to bounce back. This long-term upward trajectory is a testament to human ingenuity and the enduring belief in the American dream. Thanks for watching. Don't forget to like, subscribe, and follow us for more investing insights. Until next time, keep learning and keep investing.